silent scream. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I haven't met. I've been down where the doubt lives loud. I've been lost in the digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantees, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway. Late night glow from a silent screen. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I have. I've been down with it loud. I've been lost in the digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantee, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway.
All right, legends. Hope you're all having a fantastic Tuesday. Welcome to another live stream. Remember to destroy that like button on your way in if you haven't done so already. Let me put the music softly here in the background so that it's not distracting. Okay. Right, guys, let's analyze the price of Bitcoin here together. What are those day trading opportunities? What can we expect here on the daily time frame? What will the next move be? Well, no one knows what the next move can be. All we can do is create a plan so that when price gets there, are we going to be ready for that execution? Okay. For now, we're seeing a little bit of a rejection. Couple of green candles here on the upside, and I am here on the daily time frame. So this is what I want to discuss today. But before we start, let me say hi to the community. Let me go through some comments over here. Good morning, legends. Welcome to the live stream. Mr. Olivier here in the house as well. Hello, legends. Welcome. British Gold. Hi. Welcome to the live stream. Good morning, Trick. Always see you here in the live stream as well. But I know there's a lot of dedicated people here. And good morning, Mr. Roos de Groot. 433, welcome to the live stream. Okisoki or Sokik, good afternoon, welcome to the live stream. Waiting for your call. We will analyze the price here together. I'm going to start here on the daily time frame. We're going to work our way down, And we're just gonna, freestyle it today. We're gonna a little bit of freestyle today, okay? Because not much has changed since yesterday, but yesterday that long that we discussed. I discussed the probabilities we left that week. I will go into that as well. I was positioned in that long already, played out beautifully. So nice little successful trade that played out yesterday. Hi, Arena. Welcome back. Okay, I read your comment yesterday. Welcome back. Okay, good morning, Mr. A Trader and legends. Yes, obviously all the legends here in the house. Good morning, guys. I'm not going to be able to go through all the comments. Devil, you must be peanut butter cause this song is my jam. Right, that is great. That is a great one. Bitcoin rallies back into previous support. Yes, we're going to discuss that. Cryptoni 1975, we're going to discuss that. Don't give away your date of birth over here in the live stream. Okay, BTC will probably collapse into the next level of support between 49 and 55k. So basically you are saying that we are going to claim that $60,000 area. Yes, guys, because I know I can see a lot of people are turning bullish very quickly. Okay, Ethereum is pumping. Some of the altcoins are exploding to the up. Well, exploding maybe is a little bit of an over exaggeration. Okay, they are pumping. Okay, they are pumping. And now the question is, will this pump continue? That is the question. But I will be ready with my trading plan. Devil, how do you deal with getting stopped out repeatedly for 1% on your account, like 10 times in a row attempting a trade such as an SFP? How do you avoid that and manage to catch the tops? This was actually a question that was asked in Friday's private live stream to the community as well. Okay, I will see if I will maybe mark this comment as a little favorite so I can get back to it. But very good question. Okay, and the quickest way for me to answer that question without going into details is that when I have my levels, I look for the best level that has the most confluence. I think the mistake that some people make when they play swing failure patterns is that they try and play every single level and they don't have the experience to do that. Okay, where when I enter at a level of confluence, like there's a daily level, there's a Fibonacci level, there's an order block, for example, and that's the area that I wait for, because everyone in Friday's live stream knows that I just wait for the price to come to my area of interest, where some people trade price to their area of interest and they get stopped out with 1%, for example. Okay, so when I attempt the trade for I usually, because I'm waiting for my area of confluence, I wait for price to get to that area before I have my first attempt, where some people would have had 3 or 4 attempts already. Okay, but also I do enter trades where I have multiple attempts, but I still get stopped out with profits. Okay, and that takes experience. And, unfortunately, swing failure patterns looks easy when you explain it, but you have to get behind that driving wheel and you have to drive the car. Okay, I can tell you how to drive the car as best as I possibly can, but it's up to you as a technical trader to get behind the wheel and press the clutch, put it into first gear and give it gas. Okay, learn how the handbrake works. When it's rainy on the road, what do you do when the car loses control? Okay, those are the things that you only gain from experience. Right, guys, let's get into the technical analysis. I think I've spent enough time on that question for now. Good afternoon from Indonesia. Welcome here to the live stream. Okay, right, potential head and shoulders. Okay, good morning, Deervold, Mr. Junior. Welcome here to the live stream. And Legends, bull trap. Could be a bull trap, and that was the title of yesterday's live stream as well, was this could be potentially a bull trap, because I know that everyone has turned very bullish, all of the sardines. Okay, and I just want to do a little bit of technical analysis, very simple technical analysis here on the daily time frame. Not going to go into Elliott wave theory, I'm just going to keep it simple. Okay, so from a simplicity perspective, you can see that, well, there was a let me grab my trend. There was a breakout. Okay, on the daily time frame, you've had a breakout. Okay, from a swing trading perspective, well, it's very interesting to look for longs when price closes a daily candle above the trend. Price has pushed up, came back for a beautiful retest, and now it's continuing, and now price is making higher highs. So from a structural perspective, you have the low, you have a higher low, and you have higher highs. So from a structural perspective here on the daily time frame, okay, it does look better now to look for longs because you're creating higher highs, okay, and you still have this higher low that's intact. Okay, you have taken that high because here you had lower highs, and then you broke market structure, higher high, higher low, higher high. So if price continues to the downside, well, you want price to form a higher low again to continue momentum to the upside. And that is how simple it gets from a momentum and a structural perspective, specifically looking at the daily time frame over here. The one thing I also looked at this morning is to say that, well, why did price stop here and why is price struggling here at the moment? Well, you just go a little bit left, okay? And you can see, well, this is where price is struggling at the moment, is at this little pivot, okay? That is where price is struggling at the moment. Because these little pivots do provide support and resistance, okay? And this is where price is rejecting at the moment, struggling to break above. So from a daily perspective, what you would like to see, hopefully by tomorrow, okay, let me just put that little box back, is you want a daily candle to close above this level. Okay, you want a daily level to close above the level to signal that there could be continuation to the upside. And for now, price is rejecting. Okay, it tried, it left a little wick behind, it's trying. Okay, maybe it still chops, okay, then it breaks through, and the longer price grinds against resistance, the more bullish it becomes. And that is if it doesn't just break out today. Okay, but a grind against resistance is usually, okay, it's like a you know, you think of this as a layer of ice. It's trying, and eventually it breaks through. Okay, if price rejects miserably and falls to the downside, that's going to increase probabilities for the bears because you're struggling at resistance and price could fall to the downside. So definitely a shorting area, definitely an area where I'm interested in shorts. When I bring Elliott wave theory into it as well here on the smaller time frames, I'll show you, well, this is a very interesting area to be looking for shorts as well, because when people start turning bullish, I like to trade against the crowd. Okay, and that's what's kept me profitable as a trader. When we made this low, okay, everyone was bearish. I entered a long. When we made this low, I entered a long. So I like to trade against sentiment. Okay, because no one wanted to enter a long here. It was going to go down to $50,000, $40,000. No one wanted to enter along, so I like to trade against sentiment. Fear and greed was at extreme fear when we made this low. I entered a short over here. It's a very simple, and also took a lot of profits from the long. Okay, so let me just clean this up over here. When I take a fib from the high to the low, well, the reason I took profits, because I got this question from people when I took this long over here. Why did you take profits there? How did you know to take profits there? Well, you tap the 0.382. And usually from a pivot high to a pivot low, I know that when you tap this level for the first time, you get a reaction at that level. So definitely a profit-taking area for me. I entered a short to hedge against my long. Okay, price fell down. Came back up, I entered another short, rode the momentum down. I entered a long, rode the momentum up, closed my long over there by mistake. Nonetheless, it was still a very profitable trade for me. Entered a short, took profits all the way down. Okay, the one trade that I did not get into is this long. I did not get into this for various reasons. I was busy, I wasn't in front of the chart, but as a technical trader, I don't care because there's always another trading opportunity around the corner. And guys, and this is something that I do like to hammer on. While people, and I'm not saying you guys, I'm talking about other bigger channels, okay, while people are arguing whether this is the end of the bear market and we're going to continue up, or no, this is just a correction, we're going to fall down, or we're going to fall down from here. While people are arguing about whether it's the beginning of the bull market or the end of the bear market, or it's just the start of the bear market, I've made money as a day trader. I've made money inside of this range. Very happy with the profits that I've made. I got stopped out twice inside of this range, once at break even and once with a tiny little loss, less than 0.5% of my capital. But the wins far exceeded the losses that I took during this range. Okay, so, and that's when I wear my day trading cap. From an investment perspective, yes, you want to know, well, is it time to buy? Well, I told everyone here in the live stream, I did buy from a spot perspective over here. And if price does come down, I will buy some more, because I like to buy when there's fear in the market, when there's blood in the street. That is where I get a little bit more aggressive with my buying. Okay, and guys, as per the disclaimer, I can only share with you what I do, okay? You need to do your own research. You are in control of your own money. You click the buy button, you click the sell button, you manage your risk, okay? I'm just a crazy dude here on YouTube explaining to you how I approach the markets. When I see blood, and a lot of it, I buy. So from an investment perspective, I did buy. And if price falls to the downside, I will buy some more. Because there's a chance that this turns into a bullish structure. 1, 2, 3, 4, 5. Okay, and I want to be part of this move, and this is why I bought from a spot perspective. Okay, so guys, on the daily time frame, okay, you can see where price is struggling at the moment. You do have that pocket of resistance here. Price is chopping this level, and it's struggling for now to break above. Okay. Right, and I'm going to zoom here into the smaller time frames in a moment. I just want to spend some time here on the daily time frame quickly, because the daily time, the higher the time frame, the more accurate the technicals become. Okay, you also have, if price does continue to the upside, looking at the daily time frame, you can see that you have a consolidation area over here, and these consolidation areas provide resistance if price is coming from the bottom, and if you fall from the top, they provide support. Okay, you have this little pivot over here, and you guys can see, when you overlap, okay, you have your box there as well. You have a pivot, you bounce. Okay, price falls, it comes back up. There's a chance for a rejection here to the downside. Okay, we've had multiple green candles close in a row, so maybe, okay, the market just needs to cool off a little bit. So from a bullish perspective, what you would like to see, looking at the daily time frame, is for this low not to be claimed. Purely from a daily time frame perspective, because you have a low, you have a high, you have a low, and you have a high, and now you have another low and you have a high. So if price does reject, for the bulls, you should not claim the low, because that's going to change market structure back to the downside. If price had to come back down here, makes a lower low, that's now, oh crap, okay, not looking great for the bulls anymore, because price can then come up, make a lower high, and then you can see it's starting to change market structure to the downside, where it can start falling back to the downside. For now, you have the channel to the upside. So you have to, and I mean, guys, obviously on the daily time frame, you need to be super patient. If you're a swing trader on the daily time frame, well, this is going to take a couple of days, if not weeks, to play out, okay, for that little move, before you can decide, okay, well, if you are in a short, this is most probably where you take profits, or you join the short when you make the lower high and you continue momentum to the downside. Okay. I wanted to see if there's anything else that I'm missing here on the daily time frame. Obviously, guys, from a simplicity perspective, I also have this trend that I'm tracking. Okay, let's make it a little bit thicker so everyone can see it. Remember to smash up that like button if you haven't done so already. I will go through some more comments a little bit later. I just want to focus on the technical analysis over here. Okay, so while I'm still here on the daily time frame, I just want to make sure that I have my daily levels marked out. Okay, so let's go and double check daily levels over here. Just want to make sure that I have all my levels inside of this zone marked out. Okay, daily level, correct. Daily level, correct. Okay, no daily levels inside of this zone. That one got swept, correct. Daily level, untapped, naked, correct. And then you have these two little daily levels here at the bottom, where you can see there's a daily level, there's a daily level. If you zoom into that price action, you'll see that's Okay, 2 valid daily levels over there. So I always just want to make sure that I have my levels marked out, because I like to watch reactions when price hits levels like this. Okay, so now let's get back into the current price action. So that's basically the daily levels wrapped up over here. Weekly levels I've already done with the community yesterday. Okay, there's our weekly levels. We're currently trading above the weekly point of control, which I think is an interesting area for a long. Okay, if price does reject here to the downside. So zooming into this price action, if price had to reject over here, okay, it did close. That's actually a bullish sign, guys. We did close a candle above, okay, the body of the candle above this high. So a retracement for a swing trader becomes interesting, because that's a bullish sign. Even if price retraces, that is a bullish sign. So the opportunity lies in where do you find the long, because price could reject here. You have a weekly point of control, okay, where the most amount of volume was traded last week. So in this last week, this is where the most amount of volume was traded. So if price had to come back down here, well, it's an interesting longing opportunity. Okay. Right. Just trying to keep it simple. You guys can see I have not dived into any Elliott wave scenarios. Okay. Just looking at simple support and resistance. Right. You could also consider this weekly level, which is untapped, to say that, well, price from an aggressive perspective, what if it waterfalls to the downside? It slices through this level like a hot knife through butter. Okay, maybe I do attempt a trade. I will keep the community up to date if I do attempt a long over here based on what I'm seeing. Because, guys, there's many times where I do not enter a trade. I'm looking for a long, and when price gets there, I will decide whether I want to take that long, depending on how price approaches that level. So for now, all I can say is I will be paying attention for an interesting long over here, depending on how price reacts, but I will keep the community updated. Hopefully, and this is most often what happens with me, not always, okay? I can be wrong and get stopped out with profits, depending on how price reacts there. A little bit further to the downside, you form a double bottom. Okay, we all know double bottoms is also bullish signs. You form that double bottom, does not take the low, okay, doesn't capitulate to the downside. Maybe it just grabs that liquidity and it can move up yet again. Okay, so from a daily perspective, 2 very interesting levels that I will be paying attention to. Okay, but on the daily time frame, you need to be very patient with your trades. Very, very, very patient with your trades. Okay, also from a simplicity perspective, okay, let's now take the levels here out the way, just clean it up ever so slightly. I know that price gets a reaction when it taps these Fibonacci levels. When I take a fib from the high to the low, when we tap the 0.382 for the first time, look at the rejection. We tapped it, okay, and price fell to the downside. Especially when you tap a level for the first time. So if price, maybe today, tomorrow, okay, it decides to continue moving up, well, that is a level that I'm going to be paying attention to. Okay, you're also starting to dip into the order block, which is resistance. Okay, and I think price already is tapping the underbelly resistance over here. It's already tapping the underbelly resistance. So definitely an interesting shorting zone for me. And I'm not saying, guys, this is the short that I want to take for that. Okay, like this long, I took profits. With this short, I took profits. With this long, I took profits. It's just about trading the range. Okay, make no mistake, if price does reject in the zone and it falls down, when price gets here, I would have already taken 50% profits. And then I leave a runner, because that's how I like to trade. Okay. So these Fibonacci levels are very interesting levels here to the upside. Okay. Everything moves in waves, and Fibonacci levels for some reason are extremely powerful. You have this order block here together with a 0.5 Fibonacci. Okay, this 0.618 has underbelly resistance with that wick that we left to the downside, and also that little pivot. So if price wants to grab the liquidity, which it usually does, okay, let's say I don't know how price is going to play out. Maybe it comes back down, then it goes up. Also rejects at the trend, 0.618. Grabs the liquidity above the order block. Okay, it can reject miserably, and it can be an awesome swing trade here to the downside. So from a structural perspective, the swing trade that I am waiting for is the short. That's the most interesting swing trade that I'm looking for. I would like price to come and tap the order block for me to consider that swing trade, unless you are already in from higher levels where you're slowly just adding a little bit to your position. Okay, if you maybe caught a short over there, or you caught a short over there, this is an interesting zone. If I was in that short, where I will add a little bit to that position, not too much so that I put my position at risk. Okay, because this is also a mistake that a lot of traders make, is that they have an entry. Let's say you have an entry over here. Okay, beautiful trade here to the downside. You believe that we're still going to, according to your analysis, you believe that we're still going to take that low. You've already taken profits, okay? When price starts hitting resistance and it comes back up, I mean, the closer you can get price to your entry, the better. Because technically that's the best thing that you can do as a technical trader. You don't add to your short here when you have an entry over here. No, it's the worst thing you can do, okay? Because then it just drags your entry too far down, depending on how much capital you add. How I like to approach this, okay, is add a little bit, okay? And I add a little, so that when I'm wrong, my position is still protected. Let me just undo over here. Okay, so let's paint this out. Guys, and I know I always love to educate, okay? If I was in a short over here, okay, and I am planning to add to my short position in this zone, I will add a little bit so that I can still protect my position. Okay, a little bit, and my stop loss will always be just below my entry, so that when I'm wrong, I get stopped out with the profits that I've already taken to the downside. But the mistake that a lot of people make, and this is the point that I was trying to make, the mistake that a lot of people make is that they add too much, and then what happens is it drags, oops, not this one, it drags your entry too close. They add way too much, okay, and then price is over here, and now you are underwater. That's the mistake a lot of traders make. They don't add enough to still have a protected position. They add too much. And then you still, they still believe, okay, price is going to reject, and it doesn't. It breaks out and it continues to the upside. Okay, so you also have to have an invalidation if you are a little bit aggressive with a short here to the downside. But yes, guys, just wanted to share that quickly. But these are basically the levels that I'm watching from a daily perspective. Okay, just want to put the daily levels here. You can see that we also have this order block that I've already got marked out. What I have seen with order blocks in my back testing is that it either taps the bottom and it rejects, which is in alignment with a 0.5, or it most often, okay, it claims the liquidity above. So one of the scenarios is it taps and it rejects. So that is where I will be looking for a short together with a 0.5, exactly what happened there. Second scenario that happens is it pushes through the order block. It almost looks like, oh, it's going. It's not going to turn back. It grabs the liquidity, okay, and then it rejects. So there's two areas in the zone that I'm looking for a short. And there's nothing for me in between. I've got no business entering a trade in between those two levels. Okay, because if it's going to enter into the order block, then I know it's increasing the probabilities that it's going to grab the liquidity. It's going to grab that liquidity above. Maybe it rejects at the trend. Okay, that would actually be a beautiful trade if it comes up, rejects at the trend, and falls to the downside. Okay, maybe, even a little bit of a fake out would be great. Okay, making, to trap the bulls. Because I can just imagine here on the daily time frame if price had to do that. Let's go long, brothers and sisters, now. Sell your house, sleep in a tent in your backyard. We're going long. okay, and you have a fake out and it breaks to the downside. Right. That's basically what I wanted to discuss here on the daily time frame. And now I've spent a lot of time here on the daily time frame. Okay, yeah, like you know everything and everyone else is a fool. What is this comment? What is this comment? Okay, everyone else is a fool. Not sure I understand this comment. Are you trying to be nasty here on the live stream? Why adding to a position instead of opening a new one? Just curious. Because if you are already in a short, it makes sense to add to that position. You can't open two shorts, okay, on most exchanges. You can only add to a position. Unless you have a different account, then you can open up a new short. It's up to you. It's up to you as the trader at the end of the day. Do you have multiple accounts? Do you know, can you open up another short, or are you only in a position where you can add to an existing short? So it's up to you as a technical trader how you want to approach this. You are on lock scale default. Let me check. Oh yes, there we go. Right. Okay. Let's do this. Let's look at the levels here again. Thanks for pointing this out. By the way, yes, I do jump from lock scale to regular. I do like lock scale on the daily time frame because of the volatility. But now, okay, now you can see that this 50% on the regular scale actually aligns perfectly with the top of the order block. But nonetheless, I'm still interested in the bottom and I'm still interested in the top. Because from an order block backtesting perspective, I have seen two things happen most often. It either taps the order block and it rejects, or it claims the liquidity above and then it rejects. So same methodology that I'll apply, but now you have different confluences. You go to the logarithmic, you have different now you have the 50% at the bottom of the order block, but it's the order block that is important to me. Okay. Right, let me go back here to regular scale, and now let's maybe go here onto the smaller time frames and analyze what is happening over here. So first up, 1 hour time frame. The daily scale also lines up with the April. Yes. Okay, last week was the first time I made money even when I was wrong. I learned that from you. I'm so grateful. Legend. I love to see messages like this. I also get a lot of DMs from people saying that exactly what you've just said. Okay, my style of trading has helped people that even when they're wrong, okay, still get stopped out with profits, or at least at break even, or with a very small loss. That is my style of trading. Okay, and you have to remember, guys, every style of trading has pros and cons. So you need to decide, you know, what you are comfortable with at the end of the day. Okay, so now the one scenario I want to talk about is to say that, well, what if price rejects from where it is right now? And there is a scenario that supports it. And I have spoken about the scenario yesterday. It has a clear invalidation. Okay, in the scenario, you have a 1, 2, 3, 4, 5 in a contracting diagonal. The 1-to-1 extension is your invalidation at $77,247. The reason this is the invalidation for the scenario is because your fifth wave is not allowed to be longer than your third wave. So this is where your fifth wave will be longer than your third wave. And you can see price rejected before it tapped the level. So for the bears, an ending diagonal carries higher probability than a leading diagonal. So you can count this as an ending diagonal, and now what you want to see is you want to see impulses build to the downside. You want to see a 5-wave structure. It's the retracement that becomes an interesting short, okay, if you don't enter the short already, and then you can join the momentum to the downside. Okay, I did highlight on the daily time frame that I'm looking for price. Ideally, for me to look for a swing short, I'm looking for price to push higher. I want this in this scenario to be invalidated, but I can still trade it if I'm wrong. And the how I will get into the swing long is that I need to see a 5-wave move down. 1, 2, 3, 4, 5. I need to see an impulse down, and I want to see selling pressure increase. And then there is my opportunity to join the next leg to the downside. So my preference is to catch the short from higher. If I'm unable to catch the short from higher, it's the structure that will tell me where I can join the party. And it's not time yet for me to join the shorting party. Okay. Finally claimed the 0.7 like I discussed yesterday, got the rejection. Okay, you also now, okay, trying to hold on to this high. Price is trying to hold on to this high over here. But in this scenario, because an ending diagonal carries higher probability, you basically want price to break down, okay, and take the $60,000 low. Ending diagonal carries higher probability than a leading diagonal. Leading diagonal is you want to see a three-wave corrective structure, okay, and you get continuation to the upside. Usually a leading diagonal does not carry the highest probability. Okay, so now I'm just going through some of the scenarios from yesterday just to see if they are still valid. So for now, this scenario is still valid until this level is claimed. Then if price continues up, I will delete this scenario. It's no longer in play. Okay, but for now it's still intact. Price rejected at the 0.7, did not claim the invalidation, and there's still a chance, even with this high over here, where you basically formed a WXY and an ABC in your Y wave. Definitely a way of counting the structure like that. Okay, there's a chance from this top that price can take the low. And remember guys, a good technical analyst will always have a bullish and a bearish case scenario. Okay, so I have to acknowledge that price could break down. And if it does, how do I plan to join that trade? For me, it's not time yet to join that trade. Okay, maybe on the 15-minute, 5-minute time frame, there's some opportunities. And I will go through that with the community. If you guys want to be part of the community, remember, because you know that's where myself and Andy do spend most of our time, is DM me the word access. There's my Telegram link. Nicely zoomed in so everyone can see it's the first link. DM me the word access and I'll send you the instructions on how to join the community. Some people have told me that they can't use Bluffin or BTCC, for example, while you can use 2bit as well. 2bit has got some amazing deals at the moment for people that sign up. And also guys, you have to use the link down in the description if you want to trade with 2bit to get the pro version. Okay, if you Google 2bit, you're going to get the generic version, which is not as great as the pro version. I've tested both of them. The pro version is amazing compared to the normal version. Okay, now let's continue with the scenarios over here. Still very much in play. This one's invalidation is still a little bit further away. So guys, I'm just looking at the scenarios, and based on how price action unfolds, okay, I can join the move to the downside. But this one is very, very, very similar to the scenario that I've just explained. Okay, it's the same path. The only difference is maybe this doesn't go as deep, but still a C wave has to be a 5-wave move to the downside. You want to see a 1, 2, 3, 4, 5. Okay, and then there will be my opportunity like I've just explained. I want to see 1, 2, 3, 4, 5. The retracement, I will join the rest of the move to the downside. Okay, but in this scenario, there's a chance that price does fall down, but it bounces back up and claims the high. And you basically form a larger A, B, C. So very interested still in longs, and I will keep an eye on the levels. Okay, specifically that 0.9. Because that's the level that creates the most confusion, where price does not claim the low and the bulls think that they're still winning the battle. Okay, that is the minimum target for your B wave if price had to fall here to the downside. It does not take the low. So people will look at it from a technical perspective and say, well, we have a low and we have a higher low. Interesting. It goes back up, it claims the liquidity above from all the people that shorted, that didn't take profits from their short, and then it falls to the downside. And this is actually a very common corrective structure. It plays out all the time on the 1 minute, 5 minute, 15 minute daily. You see them everywhere, okay? And these corrective structures like to confuse people, because often what they can also do is they grab the liquidity below, so they stop out all the longs. Okay, everyone that was bullish that didn't take profits here to the upside, they stop them out, liquidate their accounts, depending on how much they risk. It goes back up, it stops all the shorts out, because once you lose this high, this low, people are going to say, oh crap, lower low. Okay, people start shorting like crazy over here, thinking that price is going to create a lower high, and then it stops everyone out, then it falls down. And What these structures love to do is they basically reset the market. They stop out all the shorts, they stop out all the longs, and then you get the dump or the real move, either to the upside or to the downside, depending from which way price action is coming. And these flat structures are very common. I see them play out all the time. Okay. So as long as price does not tap the invalidation at the 1.618, anywhere inside of this red box, price can reject and fall to the downside to create a C wave. And yes, it can still go back up for another C, and you basically form a flat A, B, C. Maybe you get here to the trend and then it rejects. Right, I want to see if I have... Yeah, I don't want to discuss that one just as yet because it's very similar price action. Now, for this ABC, okay, you basically want price, and this is as per the daily time frame analysis. Okay, you basically want price to continue chopping to the upside. You have an A, okay, you have an ABC and a B. And now you want, because this is a C wave, the structure has to remain bullish. So inside of the structure, this local structure, okay, you want to see higher highs and higher lows. And that is still a very interesting area of resistance for me. Like I've explained on the daily time frame, the order block. Okay, you have the order block over here. And preferably, I would like to see price grab that liquidity above those highs. Okay, I haven't done some targets for this scenario yet, but let's quickly do that. Okay, you take a fib from the low of A to the high of A to the low of B, and there you have your targets for a C wave to the upside. Okay, and what I typically do is if price continues to the upside, I keep an eye on these levels. And what is also interesting for me is look at where price got the rejection yesterday or early this morning. Look at where price got the rejection when you use this fib pool at the 0.7. So now I know that this fib pool is valid. Look at how you got the rejection at the 0.618. Again, 0.618. Okay, so I know that these levels mean something. So that if price continues up, I will be paying attention to the 1-to-1 extension. To the 2, okay, I will just wait and see if I can get into a successful trade at those levels depending on how price reacts. A common C wave target is the 1-to-1 extension. The C wave can go all the way to the 1.618. Okay, but this structure needs to remain intact. Okay, and this local structure basically looks like it has formed a 1-2, 1-2, maybe this is another 1-2, maybe it's building up momentum, but you basically do not want to lose the structure. It needs to create higher highs and higher lows. So basically you do not want price to claim this low. If the C wave is going to get all the way up here, that low should not be claimed. So this is a very interesting longing zone. For the C wave to get all the way up here, if it is maybe going to get here, but even to the 1-to-1 extension in the zone, okay. I don't know at which, no one has a crystal ball where they can see exactly where price is going to reject, but I will keep an eye on all these levels. Because so far, I mean, if you got into this SFP, beautiful rejection, damn. If you got into this one, also a nice little scalp trade. If you got into this one, well, now you have an amazing entry because in the 1, 2, 3, 4, 5, okay, that could be the price just falling here to the downside. So just remember, guys, this fib pool, if you want these levels on your chart, you take your fib from the low to the high to this low, okay, this low over here. That's your fib pool, okay, to get these levels, right? I like to have all my levels marked out. So when price gets to that level, I can have alarms and I can pay attention. How long did it take you to learn Elliott waves? I like it, but it's a little overwhelming, feels complicated. Kelly, yes, Elliott wave theory is not easy. Okay, the first strategy that I mastered was the D-line strategy. It's basically this strategy, okay, where you play the breakouts, okay, however you want to do it, the breakout strategy. And that was my first successful strategy. I knew about Elliott wave theory, but I knew from what most people said and what I read about Elliott wave theory, it is considered the most difficult thing to learn in trading. So I thought to myself, well, let me at least first master a trading strategy. I don't care about Elliott wave theory, so that I can turn profitable as a trader just using my simple D-line strategy. So once I turned profitable with the D-line strategy, I went on to swing failure patterns, which is now, by the way, one of my favorite strategies because it enables me to get in with very small risk. And then once I mastered swing failure patterns, I went into harmonics, and also that's where I started studying Elliott wave theory. Okay, and now I can use Elliott wave theory in combination with my trading strategies. Okay, for example, I'll have a scenario that says, okay, it could reject here. I'll use Elliott wave theory to build confluence, but I use my swing failure strategy to enter the trade. So I don't trade Elliott wave theory. I use my trading strategy, okay, and then I use Elliott wave theory as confluence. But this trade is not an Elliott wave trade. For me, that's the way I see it. Okay, that trade is a confluence trade. But Elliott wave theory tells me that it is an area where it can reject, so it gives me directional bias to look for a trade in the zone. I hope I'm explaining it in a way that makes sense. But yes, Elliott wave theory is not easy. Okay, it really is not easy, but it's the only predictive tool that we have. It's the only one we have. If you want to get a feel for how price can move, okay, it's the only one we have. Right. And those are basically the scenarios. So what I want to do now is I want to just go here into the 15-minute time frame. Let's look at this little structure that is formed here to the upside. Okay. Yeah, unfortunately for the bulls, it's easy, guys. I know the level is far away, but it is what it is. That low should not be claimed for the bulls. If we're going to see continuation here to the upside, this is the low that you ideally do not want to claim. Okay, because this is a three-wave structure. Oops, I drew that a little bit off. This is a three-wave structure. Okay. You have the most amount of volume in this move to the upside. That's where the most amount of volume lies. So can this be a 1, 2, 3, 4, 5? Let me see something. I just want to measure the length of this wave. Okay. No, I don't like it because then your third wave is the shortest. Just want to measure the third wave. Yeah, I don't, because I did see this count from some people where they're saying this is a 1, 2, 3, 4, 5. You have a 5-wave structure. What I don't like is your wave 5 and your wave 1 are longer than your third wave. And in Elliott wave theory, it's not allowed. It's a hardcore rule. It's not even a probability rule. Your third wave is not allowed to be the shortest, period. Okay, so I cannot count this as a 5-wave move. You get a deeper correction, you still make a higher low, and you continue to the upside. Okay, so I can't give that scenario high probability at all. The only bullish scenario that I see from this low is multiple 1-2s. 1, 2, 1, 2. Okay, it's building up a spring. Then you're going to get those 3, 4, 3, 4, 5, 4, 5 to the upside, and a 1, 2. And you want to see continuation, and this is why this low is so important for the bulls. So you want momentum, it's building up momentum. You do not want $70,000 to be claimed. For the bulls to continue, $70,000 should not be claimed. Okay, so this zone now becomes obviously interesting to look for longs, because if you are bullish and there's a chance that price is going to continue to $85,000, $80,000. This is what I'm seeing on everyone's thumbnails at the moment. Okay, well, you want price to find support before it smacks the low. Okay, so a good area to look for longs for me is sweeping up these lows, the liquidity below these lows, which aligns with the 0.618. You have this consolidation area that can provide support. And And you basically do not want to lose this range. So maximum level being the 786. And I know it's a big area. It really is a big zone to look for longs. So the best thing I can do as a technical analyst is to say that, well, which zone has the best confluence? Okay, the 618 has price action to support if price gets there, and the 786 has this consolidation area, most probably a point of control there in the middle with the 786. So that is the low that, or this is the zone, the $71,000 500 zone is the zone that I want to see hold for the bulls. It should not go lower, because once you claim the 0.886, you increase the probabilities of taking the low. So you ideally do not want to tap this level, or price should ideally not tap that level. Okay, also from a timing perspective, let's quickly check this out. I just want to use my time fib here from the low to the high. This is something that I've included as part of my trading strategy, is that I would like the low to finish after the 0.382. Something that I have seen with my backtesting play out often is if price starts dropping aggressively here to the downside and it comes to the maximum zone before it hits the 0.382, it has an increased probability that it's going to take the low. So whatever price is going to do here, you want it to chop sideways so that it can get into the zone from a timing perspective before it claims the low. So basically, let me just take the scribble out here. Okay, so I just want to see when is this time. Why is it not giving me the time? Okay, my horizontal thing for some reason is gone. Okay, but you guys can do the same. You know, you take a time flip from the low to the high, and you will get the 0.382. And this is just part of my trading strategy. You don't have to do this, guys. I've just seen, okay, when you have an impulse to the upside and it starts correcting, this is where, okay, from a timing perspective, I get interested in a long. So the more price chops sideways, okay, you need price to chop sideways so that it can take more time before it claims the low, the better for the bulls. If it starts falling aggressively to the downside before it hits the time, my minimum requirement, I will switch bearish. And I will look for retracement, okay, maybe to enter a short, because this can become a 1, a 2, and a 3. So time for me is something very important that I consider as part of my trading strategies. Obviously, guys, this was a great short. I'm not sure if anyone was able to jump into that short, but there was also the long. Okay, I got into this long yesterday in the live stream. I discussed this long. I got into this long. Okay, it took the highs where I took majority of the profits, fell down, and it stopped me out. So I missed this move, and I don't care, guys. I missed the move, this nice little move to the upside, but I had a successful trade yesterday. Very happy with that trade. And for me, it's just more important to say that I had a trade that played out according to my plan. I wanted price to find support at the 0.5 when I took a fib from the low to the high. Okay, as per the live stream yesterday, I highlighted my trading plan inside of the community. Do I still have it here? I want to highlight that exact plan, guys, because, you know, it's about having that plan. Was it this one? No. Yes, this was my trading plan yesterday. Okay, for the community members, you know exactly, because this is what I shared in the community yesterday. I didn't change anything. Okay, I had my fib. There we go. And I think I also had a box over here. Okay, I had a little box over there because price was here somewhere. And I said, okay, if price moves up, I will consider a swing from the high. If price moves down, I'm looking for longs inside of my green box. This is my invalidation. And for this trade, I'm just looking to take the highs. Yes, it can move higher, but that was my plan. I just wanted this trade to take the highs. I left a little bit of the position open for in case it wants to continue. It came back down, stopped me out. I don't care. It's a successful trade. Okay, and it looks like price actually formed an ABC flat. Remember that ABC flat that I spoke about on the higher time frame? Well, here's one. Okay, just want to put the music a little bit softer here in the background. Here's an ABC flat. Beautiful. Okay. A, B takes the highs, and a C, okay, that's a running flat. I think it didn't take the low. Let me just check. Did it take the low? No, it didn't. It's a running flat. So if the C does not take the low of A, then we refer to it as a running flat. A little bit more rare, but they still happen. Okay, but basically you form an A, B, C, and then you build continuation here to the upside. So this could be the end of your 1, 2, 3, 4, 5 inside of this structure. And this is why I'm very interested in the time fib from this low to the high, because I acknowledge that this structure could be finished and it needs to correct itself in order to get continuation. I want to see where that weekly level is. That weekly level is very low. We'll see. We have a point of control. By the way, guys, I don't think I've included my point of controls for today, so I just want to double check that. Do I have all my point of controls? Because they can provide some nice support. Okay, so I just want to clean up some of the mess here. And switch off the weekly levels. I just want to go and include my, well, make sure that I have all my point of controls here on the chart. Just wait for that to load up. Yep, that is the only one. So there's still one above that has not been tapped ever so slightly. Front run this zone. That was also part of my trading plan yesterday. I said, guys, if it gets there and it rejects, I'm going to take that short. My alarms went off, but it didn't take my level. This is why I missed the short. And this is one of the cons of my trading strategy. And I'm happy to live with that. I'm very happy to live with that. One of the cons of my trading strategy is sometimes, okay, it doesn't tap my level and I miss the trade. But it's also one of the rules that's kept me profitable. Okay, and I think the people on Friday inside of the live stream saw this firsthand, where I was waiting for my level, waiting. Okay, and eventually price got to my area of interest. I entered the short, almost got stopped out. Price did fall down, took profits, protected my position, got stopped out with profits. Okay, so every trading strategy, every single trading strategy has pros and cons. And I suppose you need to know or be comfortable with the cons. If you're comfortable with the cons, then it's a great trading strategy. Okay, as long as it keeps you profitable as a trader. Okay, but nonetheless, guys, yeah, we have a naked point of control. This one has not been tapped, but I do think if we get a larger correction and continuation, like this level is going to be smashed. Okay, unless you form an ABC. Okay, so I will keep the community up to date, okay, if this had to happen. So what I will be looking at, and I think this could be interesting, is I want to just grab that time fib again from the low to the high. Okay, if price comes down, okay, maybe that's an interesting long. I will still, but then I'll treat it as a scalp. Price could come down, bounce before it taps my minimum target. If it goes up before the low tapped my minimum target, I will consider a short from this zone, because this could still form an A, a B, and a C. So you can see it's not to say that I'm not looking for a long because my minimum target has not been tapped. It means that I manage my trade differently. I can still catch a long, but I will treat it as a scalp. If price creates a B flat, I will look for a short. But I can tell you now, when I will not look for a short, is that if price maybe just makes that little lightning bolt like that, doesn't claim the highs, maybe it gets a bounce, rejects, still a profitable trade if you do attempt that long. But if price does this, and then it bounces, okay, I'm not looking for a short in the zone anymore. Because I realize that this could be the impulse, your correction is finished, and you get aggressive continuation to the upside. Okay, then I'm looking at higher levels for a short. So it's just about I change my plan based on how price action develops. And I need to see price action in order to change my plan. Right, so also I just want to see from a Fib confluence perspective, okay. A little bit in the middle between the 0.382 and the 50%, okay, but I will definitely still observe the reaction at this level if price gets there. So if price continues to fall, this will be a zone where, you also have that price action there, that consolidation that can provide support. So I will look for how price reacts in that zone, okay? And so longing opportunity. That is for me a shorting opportunity. If price comes back down, well, longing opportunity, ideally, I would like to see the liquidity below those lows claimed. Okay, maybe the 0.7 to the 786 is where I'll look for a long. So now you guys can see, okay, that I have a plan. And when price gets to my areas of interest, I will make a trading decision. My plan is I want to see a reaction in the zone. If I don't see a reaction, I don't take the trade. If price does move up, I am in the long. I want to see how price rejects at that naked point of control for a shorting opportunity. For me to consider an aggressive long here to the upside, I ideally want these lows to be claimed. If price does this and it front runs my zone, it's okay. For me, I'm okay with that. But I want price to come to my plan. And if price doesn't come to my plan, I don't take the trade. And and this is something that I always highlight in the community as well. Trade the structure that makes sense to you. You need to have your own plan. And if price action doesn't come to your plan, there's no trade. Okay, and sometimes I miss trades because price doesn't give me what I want to see. Okay. And I suppose the thing is you need to get comfortable with being wrong. If price doesn't come to your plan, then you just simply don't take the trade. Okay, learning of the running flat answered so many questions for me. Yes, the running flat. Do you guys remember this? That running flat it's unfortunately a running flat is very difficult to trade. They are really difficult to trade because I remember this running flat. When we made this low, you have a 3-wave up, which is your A. Okay, and I remember this because I analyzed it. You have a move down and a B wave. And I was looking for a short there. That's where I was looking for the short. I really wanted to short this. And here you formed a running flat. You do not take the high. And that's your C. Or WXY. There's many ways in which you can count it, but I'm just trying to explain to you that price can form a corrective structure where this leg does not take the origin of A. And those ones are usually difficult to get into because most often what happens is C claims the high, B claims the low, C claims the high, and then it falls down. It resets the market. And when that happens, it's very difficult to get into that short. Okay, and now the same thing happened here on the local time frame on the 15-minute. You can see here, okay. Guys, I don't have to count it on the smaller time frames, okay. You took the high, you did not take the low. That's a running flat. And they are not easy to get into, unfortunately. For me at least, it's not easy to get into those longs. Because it retraces so deep, it looks like it's going to claim the liquidity. Now that is a better long. It claims the liquidity, it starts trading back above. That's where I'm interested in a long. I know exactly where to put my stop loss. So based on my trading strategy, I can't get into that trade because I have to follow my trading strategy. Based on my trading strategy, I can get into that trade. Okay. Good day, Devold. Good day, Legends. Are you doing classes? I do have a course. If you're interested, you can DM me the word. You can DM me on Telegram. You don't have to DM me the word access, but you can DM me on Telegram. Here's my Telegram. Okay. And I will send you the information. I do have a course, obviously, guys. I do even here on the live streams on YouTube, which is free, by the way, for anyone. Okay, I just can't help myself but to educate, because I believe it's better to learn to do this yourself than to follow someone, okay, for signals and you don't know how to do it. So they're giving you a fish for a day, but you don't know how to catch the fish. Right. Wow, baby genius. Hi, you think big picture BTC still in bear market? I think there's a higher probability. I actually went through some daily time frame analysis this morning. Okay. What is this? Magnificent 7 has just started. Don't know what the hell that is. Okay, but I need to open up my Coinbase chart because that's where I have my daily scenarios. Guys, no one has a crystal ball. No one knows exactly what's going to happen. Okay. Yeah, I mean, you have your 5-wave up. Okay. And there's a little bit of a problem with each scenario. Okay. But this 5th wave ended in a contracting diagonal because of that 3-wave. It's the only way you can end a bull market is if the only way in which you can end a bull market at this top is in an ending diagonal. Carries a higher probability than a leading diagonal. But there's a problem with this structure. Okay, wave 1 has to be counted as a 3-wave structure, and this looks very much like an impulsive structure. So there's a little bit of an issue. But nonetheless, this scenario supports the 4-year cycle theory. Okay, so when I take the scribble here out the way, so according to the 4-year cycle theory, if this was the top, this is the only way in which I can count the structure. Then you want to see your W, or you basically your W, X, Y. Okay, you basically want lower. If this is the top, it's not time for the bear market to be over. And it's simple, guys. You take a time fib from the low to the high. And you can see it's not time. So for the bears, if you believe that this was the bottom, okay, and this was the top of the bull market, well, it's not time for the bear market to be over. So this is only the first leg down in the bear market. Maybe it goes up and then it comes back after the 0.382. So for this impulse to correct itself, it's too short to continue and continue the bull market, if this is your count. And I've just shown you that there's a little bit of an issue with this count. Okay, but then there's also this one. So let me take that time fib out. Then there's a scenario to say that, well, this is your 1, 2, 3, 4, 5. This was the end of the bull market, not the top. Because that's a 3-wave structure, a B wave is allowed to have a 3-wave structure. Now, this scenario actually has less issues than the previous scenario. Okay, it's not invalidated. I'm just discussing with you the problems that I see there from an Elliott wave theory perspective. So you can label this an A, a B, and all of this a C, and you formed a 1, 2, 3, 4, 5. C has to be a 5-wave structure, so there's a chance that this could be the low. And you continue. This is 1, this is 2, and you create an explosive 3rd wave to the upside that could easily go and tap $200,000. I don't want to be that person that just says this is the scenario, okay? Because I know very well what I'm looking for. So for the bull market to continue, I have to see a 5-wave move to the upside. So I basically need to see this, something like this. If I take a bars pattern, okay, I think this is going to be the easiest way for me to explain it. Okay, if I take a bars pattern from this little impulse that we created, I have to see this before I will consider, okay, joining the move to the upside. I want to see a 5-wave impulse. I want that high to be claimed. I want to see a higher high, and it's the retracement that will, where I will join the party for that move up. So I need to see all of that so that I can long over there. So there's a lot of price action that I'm going to miss out on from a swing trading perspective, but I need confirmation that this was the end and this was the end of the correction. If this was the end of the bull market and this is the end of the bear market, I have to see that so that I can long over there. Market structure needs to change. You need to form a higher low, and then off to the races you go. You have your channel to the upside, and then there we go. But it's this long, okay, that's your best move to trade anyways to the upside. So I don't mind missing out on this to wait for confirmation. So it's just about being patient. There's nothing in me that is, oh man, price gets here to the upside and now I'm like, oh, I missed all of this. I missed the bull market. No, you haven't. Okay, because each impulse has to correct itself. Okay, so maybe I need to do this. Maybe let's take another bars pattern. Okay, let's do that. Okay, I think this is going to be better. So I have to see this, and then there is my opportunity. In the zone, might not catch it perfectly, but in the zone, I will analyze, because I've analyzed this structure to the downside. And for those of you that were in my live streams, when I analyzed the structure to the downside, this is where I bought. You can go back to those live streams, okay? You will see this is where I bought. I even made an announcement. I had a list of tokens that I bought. I think Link was in there, ETH was in there. I bought some Bitcoin, and people wrote me nasty comments when I bought over here, laughing at me when I bought over here. And I told them the reasons why I am buying, okay? Because this is an impulsive structure and this is a corrective structure. So for me, it makes sense to buy in this zone. And that is where I'm going to buy as well. But I have to see that structure in order for the opportunity to join the next leg to the upside. Hope that makes sense. Sorry guys, I know I've digressed here into the larger time frames, but that is how I approach the markets. Okay. That's why I never feel FOMO if I miss a long. I never feel if I miss a short. You know, those are some of the things that I just had to clamp down on from a technical trader's perspective, is that there's always another trade around the corner. Don't have FOMO, don't have fear, okay? Always another trade around the corner. Just trade the structures in front of you. There's always another opportunity, okay? So if this thing turns out to be super bullish here to the upside, this little local structure here on the let's go here on the 1 hour time frame, okay? If this structure just absolutely rampages 1 2 1 2 1 2 maybe even, and it goes 3, and I have to zoom out, and it says 4 5 4 5 4 5 because it has to repeat, okay? Can you guys see it? I'm just looking for the structure. Once I see that, I know I need to short. I need to look for shorts in this zone. Once I start seeing price do exactly the same thing, I want to see high amount of volume in the middle. And as price chops to the upside, I want to see volume decreasing. So I look for what I want in my trading plan. That is where I become very interested in shorts, and that is where I become very interested in longs. Right, that higher high from the bars pattern looks like a Gartley. Hypothetically, that could be interesting. I'm measuring it out right now. Yeah, guys, do you guys remember this Gartley that we discussed here on the live stream? Mr. Osrin pointed this out. Okay, I also have Gartley patterns inside of my trading course. Right, TP1, all 3 TPs. You had a TP at the 618, you had a TP at the C point, and you had a TP at the A point. And typically, if you do trade harmonic patterns, you should be out of the trade. Or maybe you left a small little runner. But all 3 TPs on this harmonic pattern has been claimed. Harmonic patterns are also known as reversal patterns. And look at where price is now. Okay. That's a reversal pattern, by the way, for if you didn't know, that's also known as reversal patterns. And I traded that long. I did get into that long. Made a lot of money with this entire move to the upside. I made a lot of money. And if you guys remember the live stream, I did accidentally close my long. I wanted to leave a runner to the upside. I accidentally closed my whole position over here, but it was still a great trade. It's still a very good trade. Okay, so after this live stream, what I will do is, I think Andy's inside of the community, or he's going to jump in soon. I'm also going to jump into the community, maybe just highlight some levels, my plan. I'll share my plan inside of the community. Obviously, keep the community up to date. And also, just want to highlight again, I will not be here on Thursday and Friday. I'm going away. I'm taking a little bit of a break. I will post some pictures inside of the community. Okay, if I catch a big one, I will show the community. And so Andy will be standing in for me on Thursday and Friday. I won't be here. So if you're wondering where I am, I'm not going to be here, taking a little bit of a break. Okay. So also, if you want to join the community, DM me the word access. I'll send you the instructions on how to join the community, because that's where I'm going to spend the rest of the day. And I'm sure Andy as well. Okay. Posting our plans, updates, and if I do plan to get into a short or a long, I will share it in the community. Thank you so much for watching the live stream. And I will see you all tomorrow, Wednesday. Okay. Have yourselves a great trading day. Until the next one. Cheers for now.